All right, AMC, AMC, AMC. Let's go, Amy. We'll check this out on the 30-minute chart. Excellent. All right, so right here, right off the bat, I see that we've got ourselves a bullish pennant formed here. So bull pennant is when we see a significant bullish move in a short time frame. Specifically, we've got a big move to the upside with AMC pushing $21.20. The price comes down and forms a very quick wedge. This is referred to as a bullish pennant. They tend to break up and out. And if you notice on the intraday, this is actually part of a broader bullish signal, which is the cup and handle. So the cup and handle, again, very bullish signal. And if you look even further, we have a triple bottom, kind of a quadruple bottom, actually, if you look at it like this. These can sometimes also be mistaken for inverse head and shoulders. They're pretty close to each other. This is more of a triple bottom just because the resistance, or I'm sorry, the support line is at the same line. All the bottoms touch this resistance. Keep saying resistance, support, support, support. So 1, 2, 3, 4 touches of the support line and then a breakout. So this is an extremely bullish signal. If you were to look at this as an inverse head and shoulders, then we've already broken past the neckline and we're looking for continuation in the stock going forward. If we do see that, then we are likely to be facing a position change of anywhere from $22 to $24 just based on the supports and resistances that we see here and here. So I'll go ahead and mark these out really quickly. So I've already got my the next resistance marked out. This is the first resistance here at $22, and we've got another one at 24. So we'll be watching for this. A big breakout above $20 is likely to lead us in onto the next run. I'm super excited for AMC to make its next move. Just a heads up that if you're going to be playing the options market, know that max pain is still around $20. So we may see a bit of a rug pull here. Market makers are going to try very, very hard to make sure as many of those options expire out the money this today here at the closing bell as possible. And then next week, we're likely to see some pretty stiff resistance as well. What we're looking for is a clean break above $20 and $21 to go and touch this resistance. A break above 22, and honestly, I think at that point she's gone. Let's go take a look at AMC on the daily chart and let's review our timeline. So this is more of the DD that we talked about on a timeline of AMC's previous squeezes. If you want to take a look at the video is on Hell's Basement. Kat, if you wouldn't, or if somebody wouldn't mind going ahead and finding a link for that video and dropping it in chat, as well as Kat, if you wouldn't mind dropping that link to that video in post. This falling wedge. Excuse me, if I can find my English. This falling wedge that formed on AMC early on in November to December of 2020 was the first timeline. It was just this period of time here, leading up from this peak here on the 24th of November up until January 27th, excuse me, where AMC squeezed in the pre-market and went all the way to $20. What we did was we doubled that timeline. That's take these two bars and multiply them by 2, and then we added a single week, and you end up with this timeline, which is actually, I drew this from peak to peak first, and I saw this, and I noticed if you multiply the first timeline by 2, add 1 week, and you get the entire timeline to the day from peak to peak. That's from $20 all the way up to $72. AMC went from 20 all the way back down to $5 and consolidated in this wedge for all of that period of time before it had a huge breakout. It broke out in 2 ways. You can see this wedge here, which was a very clear breakout, but also the OBV broke out on the same day. This is what we were watching. Note this little U here on the OBV. I'll cover that again in a little bit more detail in a second. But when you see this breakout and then consolidation for the next trading week, this begins the final week of the squeeze, May 24th or May 25th, which is the day that I called out AMC is going to squeeze imminently, and it went to $72 by January or June 3rd. So if we take the second timeline and then we multiply it by 2 and add 2 weeks, that gives us our third timeline. So literally, second timeline right here, copy it, lay it down next to it from end to end, and you end up with today. As a matter of fact, it's today. That is the second timeline. And then plus 2 weeks. 1, 2 weeks gives us what I'm speculating is going to be the complete of the third timeline. I'm literally throwing this out here as a massive disclaimer. I can't be clear enough about this. I'm trying to predict the future and I have no idea what is going to happen. I'm just looking at this chart and seeing a pattern, okay? There's no precedent for this anywhere in the market. I cannot guarantee the accuracy of this, and I'm not claiming it's going to happen with any degree of accuracy. This is a wild, speculative guess at what might happen. There's no way I can ever possibly know this. Please don't trade on this information. Don't treat this as gospel. Treat this as tinfoil stupidity for what it is. Okay. This is tinfoil hat stupidity. All right. So you shouldn't trade on this information at all. Please don't. Now, if we want to actually trade on some real technicals, AMC created three wedges. Okay, there was a falling wedge here, there was a standard wedge here, and then there was a falling wedge here on AMC's chart from June 3rd all the way out till late June here in 2022. That's where the tips meet. So we actually hit a top. We met resistance here back at $44 when we thought that AMC was going to complete a cup and handle and then run from there. Turns out we got rug pulled. AMC's been selling off since then until it hit the bottom at about $13.50. This actually created a falling wedge within this broader falling wedge. Okay, so it's a wedge within a wedge. All right, wedgeception. This break down below the wedge actually would have been a bearish signal had it not been for the breakout that occurred just 4 trading days ago. So the breakout, we re-entered this larger wedge, we broke out of the smaller wedge, and now we've established a new technical pattern. And what we can do to further confirm this is we see the volume around AMC. Note the volume down here where there was a channel in the OBV. It's really small. It's kind of hard to see, but you see there was a breakout that occurred right here when AMC was trading at about $3. It broke out from 150 to $3, and then the run happened a week later. AMC topped at 20 and then sold off, consolidated all the way up until this point. Okay, so on OBV, we're going to draw another wedge. Okay, you see that? OBV got another wedge. Now, what's interesting, broke down below again, okay? If you look at this channel here on the OBV earlier, that wedge also broke down below. We had a breakdown below the wedge, and then a few days later, broke above it. So, one more. AMC, create a wedge here. And I'm just following the bottoms, right? I'm just following the bottoms. Bottom, 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 and then broke down below it, okay? We created this little U. Now, if this tinfoil hat theory of mine turns out to be accurate, which I'm not saying it is, I'm not saying that. But if it happens, then there's going to need to be a lot of volume coming into the stock. If there's a lot of volume coming into the stock, that volume will have the power to push AMC's price by a significant margin. If AMC's price gets pushed up in a specific direction, like up to past this mark, we can speculate that the price will move somewhat in what would the word be in correlation with the OBV rising, because OBV is bullish volume. That's the price rising above with the high volume. So if we see a lot of volume come in, AMC may break out above this wedge. If that happens, then in order for the OBV to lift by that much, I would assume that the price will have to lift comparably so, probably by about 5 to 10%. That would put us above $22. So that meets up with our resistances. If we see AMC make a sudden pop up for $20, I'm going to be expecting to see the OBV follow and leave us right about here. Now I'm going to mark out A couple other things that I noticed, okay? AMC, when it broke on the OBV, when it broke above here, it had a top, it relaxed and consolidated. The price does the same thing, okay? You zoom in on this, price pops a little bit and consolidates, and then it runs again, okay? So consolidation, and then the OBV runs again. Pops up above, consolidates, and then runs again. This one took a full trading week for it to consolidate. Now, if we see this happen again, AMC, pop above, consolidate, and then run again. Okay, that's basically what we're looking for. So if you're looking at drawing this chart yourself, you can follow along. Just go ahead and take a snapshot of this, take a picture, whatever you want to do. But all you're doing is you're just adding the OBV, draw some wedges on AMC's charts from November 24th to January 29th, from January 27th to May 21st, and some wedges from June 2nd all the way down to, well, wherever this ends up. But just follow the bottoms and the tops, okay? It's very simple charting. Just drawn some wedges, all right? And then do the same thing with the OBV. Follow the bottoms and the tops, follow the bottoms and the tops, and then you'll notice there's a big dip each time. These big dips, these are predictable, and I'm betting that we're going to see some reversal. So that's my stupid tinfoil hat theory and my big YOLO gamble on AMC. If I see that OBV pop above, you bet your ass I'm going to be buying some stupid out the money calls for about 30. Okay. That was a lot of talking really fast. How we doing? 12:17 p.m. Oh, that's 3:17 uh New York time. Let's go take a look at what's going on in the live stream chat. Sorry, I was like focused on trying to blurt all of that out as fast as I possibly could. Unfortunately, I'm not going to be able to stay till the closing bell because I have an appointment with a dentist that I can't put off. So I hope you guys will understand. Got to be responsible.
There is a couple questions in the Discord and live stream questions.
Excellent. Let's go ahead and take a look at those live stream questions. Uh, oh yeah, go for trades. I'm sorry. You had asked about the short exempts theory. Um, so I'm gonna pull up some data on AMC and go take a look at those short exempts. And just keep in mind that the short exempts and all of the short volume data only gets published once a day at the end of the day, so about an hour after the closing bell. So we don't have data from today. We only have data from yesterday. But I will go ahead and show some of that here. If you guys in the stream are enjoying this, be sure to give us a thumbs up, give us a like, let us know how we're doing, give us some feedback and uh, your friends. That way we can share the DD, the knowledge, and the research with everybody else that we possibly can. We're not strangers here. We don't keep our trade secrets here. We don't hide the truth from people. So we're all about transparency and disclosure here, just like the market should be. Go switch over to my browser. Okay. You guys should be looking at this AMC data right here. So AMC's chart, courtesy of this data is courtesy of um, the FINRA short exempts, which you can actually, or FINRA short volume data files. These are free files that you can download and look at for yourself. But what we've done is we've programmatically churned up these numbers and give it some highlights so that we can look at any anomalous activity. There's some things that we actually notice here. So AMC has some pretty significant highs here recently, up at $20 on the January 20th, and we retested that high just recently. And if you happen to notice, there's been a lot of shorts over total volume here. So of the total volume that's been traded in AMC, more than 50% of it every single day since January. Um, that's pretty ridiculous. What we're also noticing is we're seeing that the delta or the rate of change on the 5-day moving average has been steadily climbing into the positive, and just in the last 2 trading days, we saw a significant pop where the 5-day simple moving average popped up above 4.5 and 4.6. The 5-day simple moving average is just taking the average price over the last 5 days, adding them together, then dividing by the number of days. That's these last 5 closing prices, add them together, divide by 5, you get the 5-day simple moving average. What we are looking for these squeezes is essentially we're looking at the short exempt volume to create a big anomalous spike. So we got some spikes here on the 21st, the 24th, the 25th, the 1st of February, and just yesterday. The reason why we look at that is because short exempts are only afforded to market makers. Only market makers get to use these. So what we speculate is that they use it to control the price by exempting themselves, because market makers make their own rules about short exempts, and the SEC only slaps them when they make it so obvious that they're doing something wrong that they themselves would look bad if they didn't smack the market maker for making FINRA and SEC look like they're lazy and sleeping at their desks. So these massive spikes, keep in mind, short exempts, they're supposed to be rare. Most stocks don't have any short exempts, or they have less than 1,000 every single day. Like, it's a rare occurrence. You should not be seeing numbers like this. AMC has done this every single day since January, okay? And even before that. There's mm, it kind of pisses me off, but we'll get to that. So what we're looking for is, we know that AMC's utilization has risen extremely high. Okay, the first trigger that I look for is for utilization for a squeeze to be above 95%. Right now, AMC's utilization is above 100%. So great, we met that criteria. The next one that we're looking for is the short exempt volume divided by the short volume. That's short exempts divided by short volume. Multiply that by 100, and you get the percentage, or the short exempt ratio. What I look for is for the short exempt ratio to climb above 3.0 or 3% for multiple consecutive trading days. We actually got really close here on January 21st, 24th, and 25th, but didn't quite make it. So we didn't react. Okay, we didn't react too strongly to that. And the third trigger that we look for is for the 5-day simple moving average to increase by 5% for 3 consecutive days. So if the delta rate is 5% or greater for 3 consecutive trading days, that's the key here. This is what we look for. Um, we also will note a spike if the 5-day simple moving average delta rate increases by 15% in a single day, but that by definition means that the price has risen so massively that a single day's move has already lifted the delta by more than 15% on this 5-day simple moving average. So the price will already be moving at a screaming rate, and basically it'll be just yelling at you in the face to buy it at that point. And that's kind of like the FOMO. So we're looking for a steady climb. That's what we want. We want the steady climb so that we can get in on the trade early before anything gets a little bit too out of hand. Quick review of AMC's short interest. Meme Maker OG. So I noticed your comment that Matt made. What I think that Matt may not realize is that Mr. Adam Aaron has the ability to exercise those options at any time at his discretion. So he does have options. So he may not have exercised them, but he does own a vested interest in 2.3 million shares. So just a slight correction. It's just like a little bit of wordplay. But Matt is correct. He doesn't own the shares. He owns mostly options, with the option to exercise at his discretion. So he does have. We'll say he has notional shares that have not been issued to him. When he chooses to exercise those, then yes, he would own those shares and he would be purchasing them at the strike price for whatever those are. I don't have that filing in front of me, so I don't know what that strike price would be, but I'm guessing that it would probably be at very reasonable level as compared to what we're buying them here at the market. Sabrina Klein, been in AMC and GME for a year. Yep, me too. It's been a hell of a it's been a hell of an adventure. I definitely didn't see myself doing YouTube or stock market research by the end of all of this, but I share that sentiment. And congratulations for the 1 year anniversary trading this bullshit. All right. AMC. First, we're going to look at the security lending volume because I really, really want to point out something that has happened multiple times in AMC's history. Security lending volume spikes happen right before the squeezes. There's actually a linear relationship. If you look at the tops and you draw a line through this, just a linear trend line through all of these tops, you'll find that there is a linear relationship between AMC's price and the amount of security lending volume, which tells us that shorts have something to do with it. They have a linear relationship to the price. Um, there is no guarantee as to, there's no way for us to know exactly why, or at least if we can know the way, it probably involves some mathematical formulas that are way too above my pay grade to figure out. After all, I'm just a devil worshipping degenerate who likes to play with stocks and draw crane drawings. But at the same time, like I have to give respect to this data and take note of this linear relationship. Also noting the failures to deliver, which seem to have an exponential relationship. So as failures to deliver tops grow exponentially, price starts to do some ridiculous things. Uh, Actually, I'll bring that back for a minute. So, something has happened with the failures to deliver that I have noted. Um, it really does have my attention. The reason why, if you guys remember, right in at the end of June, something happened in the regulations of the DTCC and the NSCC. Look up the regulation filings for DTCC 2021-005, and you will find that the DTCC changed the lending rules and also uh, the marking of shorts. So there was an implementation where shorts could not be lent out more than one time as a way of curbing naked shorting. This was highly demanded by retail. This took place back in April. The NSCC 2021-002 was a supplementary liquidity requirement, adding that uh, during periods of greater volatility, it would require supplemental liquidity requirements for short positions on stocks. So this actually required market makers and brokers to actually own stock or post liquidity, as in cash, for the net for a certain percentile of the total net position. In simple ape speak, it basically means when market makers have lots of shorts, NSCC comes to them and says, "Hey, asshole, put some money down on the table and prove that you can actually cover this if it goes against you." And this was a requirement that was added in June. Suddenly, the FTDs evaporated. They're just gone. I don't think that that means that the naked shorts are gone, though. There's something else going on here. So, taking away the failures to deliver in the exchange reported interest, because we honestly don't trust the exchange reported interest. I'm much more interested in the estimated short interest per Ortex, who I find to be extremely on the money and pretty reliable on a daily basis. So if you look at the exchange reported interest, note how close these lines are. Let me take away the days to cover so it doesn't get confusing. Look at how close that is. Look at how close that is. Like that's pretty on the money. I can't fault Ortex for being like a little bit off on a daily basis because they're estimating this just with the loan data that they get from their data provider, but they're still like it's like that's got to be like within a uh 90% accuracy. Like that's really close. So kudos to Ortex, who is, by the way, a partner of Hell's Trading Floor. I just want to make mention that Ortex is partnering with Hell's Trading Floor, and they offer us a discount. So if you check the link in the description with Ortex, and you want to sign up for Ortex, all you have to do is just use our affiliate link to sign up for an account with Ortex and start a trial. They have a free trial available for anybody who wants to start with them, so you can get access to this data right away. And then after that, if you decide you want to go in for the long haul, you can either buy a monthly subscription or pay on a yearly basis for a slight discount. And all you have to do is just email support@ortex.com, tell them that True Demon from Hell's Trading Floor sent you and ask for a special discount from your friends at Hell's Trading Floor, and they'll give you a little cut, um, so you can get access to this data for a little bit of a better price. Cost to borrow is next to nothing, which actually gets my attention. It's starting to rise though since the price is going against them. Would be interesting to see what happens. Man, that utilization though, that utilization. We were down to 72% utilization in mid-January. We're now at 100% overnight. What is going on? What is going on? Let's also take a look at some of these trends here. Utilization down to 84%. Who is hammering me with messages right now? I apologize for anybody who is hearing all the doot doots. Need to turn those off. Put myself in the do not disturb mode or something. Okay, there we go. Sorry about that. So if we look at the massive spikes in utilization, look at how the utilization just drops out of nowhere and then takes off again. And it's interesting that there's like some slight covering that occurs here, and then the utilization rockets through the stratosphere, and then suddenly the price just goes parabolic. And this happened here too back in March, like March 22nd. The utilization dropped out, and then all of a sudden it maxed out, and we stayed at 99% utilization for the next month. And it wasn't until the actual squeeze week starting on May 24th that that utilization started to go down. But the short interest is only a little bit of covering. The short interest continued to climb ever since then. So I'm wondering what's going to happen here now. If our man that beeping is getting ridiculous. I thought that I turned that off. Okay, hopefully that solves that problem.
Where is it that you're hearing it at? YouTube. I'm not sure if y'all hear it, but I'm not hearing anything, brother. And I'm not
Oh, you're
hearing
not?
anything.
Okay, so just Discord sends it out to me. Man, it must not be going out to YouTube. At least I hope it's not. Huh. Well, I guess thanks, Windows. All right. Uh, I am. Oh, is that what that is? Okay. All right. Well, that makes sense. All right. I'm probably going to have to go here in a short while. I actually need to Google map my way to my dentist just to see how long it's going to take me to get there. I got a little bit of time. A little bit of time. at least enough time to wrap up the stream here with you guys over the next 10 minutes. If you guys have any questions or anything that I can cover in the last 10 minutes of this stream, and then I'm going to go ahead and let you guys go, you can head over to your other favorite YouTuber for your close market close entertainment. Um, but this pretty much covers the remaining trades that we have here. Let's see what else we got here. I'll jump over to our other charts just so that we can look at all the remaining plays that we have. Progenity had a bit of a sell off today. I'm gonna switch this back over to the 4-hour chart. So Progenity is actually testing that low again, a new lower low. So if we're looking for it to bounce off of this support again, we'd be looking for it to come back down to touch 165, 160, somewhere in that range. This has now become support for us, so this is actually a good confirmation test of that support and also a buying opportunity. So if you're looking to go long in Progenity, those leaps be cheap. I got a good handful of Progenity calls and shares down here when we were trading below a buck 50, and I'm really happy with my purchase. Those don't expire until March and April. So I gave myself a lot of time there, and then I got more leaps for January 2023 and 2024 because I'm going long on Progenity for a lifetime. That is my thesis for Progenity. I'm going long for the lifetime. They laundered the shorts through ETF. Fitzy. It's actually it's a compelling argument. It's because when you look at shorts like or the ETFs like XRT, you see so many shorts, like it's 500% SI. Like that doesn't make any sense that an ETF can be shorted more than 500% of its total tradable shares. It makes no sense. BBIG will give a quick update on just for the closing bell. Kat, if you want to go ahead and give us set a marker here for yourself so that we can cover the closing comments on our squeeze tickers. So Finco Ventures, BBIG, retested its low. It's created a inverse head and shoulders pattern, which we're now getting ready to test the neckline. So this one is actually getting ready to make a move, I think. I'll be looking for BBIG to test above, we'll say $3.25. This is the neck. So I'm going to be placing an alert on this crossing above.
Looks like TD has the Ortex screen on rather than TV
Oh,
from Vert. It's coming
damn
from
it. I'm
Verde.
sorry, guys. I'm sorry about that, guys. I'll go ahead and move us over to the trading view chart. Sorry about that. Sorry about that.
Appreciate that, Verde.
Yeah, thank you, Verde. Yeah. Yeah, always feel
Uh,
free to come on voice and interrupt me if I'm showing the wrong screen. Always let me know.
No worries, man. I'm just having dinner.
No problem. All right, you go eat your dinner. We're going to go ahead and go get our tendies frying here. So Vinco Ventures, we're looking for it to break the neckline at $3.25 before we see a run. That lines up with our resistance line here on the Fibonacci that we've got drawn here. The next fib resistance is all the way up at 380. So BBIG, if there's going to be a move coming, we're looking for it to come in the next 60 days. We need to see some volume come in and some confirmation. So right now, we're just being patient. Progenity. Progenity is having a hell of a trading month. It's doing really well since the beginning of January. It's come back up by about 60%. Holy smokes. So Progenity has recaptured a lot of losses that it gave up since the first week of January, and we're looking for it to test this new low here. And if we see a bounce here, then we're probably going to be looking at continuation here up to our $2.25 to $2.30 resistance. GameStop and AMC, we covered this a little bit earlier, so I won't spend too much time on it here. But AMC is starting to go back up to test that resistance that we saw here at $22. If we see a breakout above $22, then we're looking for the OBV to curl up and for volume to come back into the stock. The volume is climbing, so it's going strong. We're really looking forward to seeing AMC break that OBV trend. If it does end up breaking that wedge that you've seen drawn on our other charts, you can go ahead and check out the video on Hell's Basement, and it'll cover that. But we're looking for it to go cracking straight through the ceiling of this falling wedge, this broader falling wedge here at above $30 before the end of March. GameStop doing much of the same thing that AMC is doing. It had a huge sell off, and the OBV did the same thing that AMC did. Go ahead and so GameStop's OBV. Oh, geez. GameStop's OBV is doing this whole wedge thing as well. So this is something to pay attention to. I'd like everybody to start drawing stuff like this on their own charts and actually seeing what they can take note of from these types of patterns. So if you see these tops 1, 2, 3, these bottoms 1, 2, 3, and then we had a break below, and now we're getting ready to crack through these resistances. So if we see this occur in the OBV, then the price is likely going to reflect it. And you notice that GME is testing its resistance at 125, 130. So if we see a crack above 130, then honestly, I'm looking for it to complete an inverse head and shoulders pattern, do a little bit of consolidation, and then go for the breakout, man. I've got 3 minutes to wrap up any more plays that we've got going on here. So I'm going to go over our big crypto squeeze plays. BTC is moving pretty strongly lately, so there's a few stocks where this is reflecting elsewhere. You notice that BTC had a huge move and then had a brief sell-off here, just kind of relaxing. The RSI is coming off of overbought, so that's a nice healthy pullback. It's not a big pullback. I'm super excited about what Bitcoin is doing. And if Bitcoin continues to run, then it's going to affect these other remaining stocks. So for these, we have BKKT, that's Backed Holdings, Bit Digital, BTBT, and then Funware, ticker PHUN. So each of these stocks have consistently shown some massive strength recently. Fun is creating a nice big cup on the daily chart, and so is BKKT. Bit Digital is doing much of the same. So looking at all of these on a daily time frame, you see this uh, increasing wedge here, and it's bounced off of these bottoms several times before it made huge moves. So if there is going to be a move, we've got an earnings period coming up for BTBT. There's a lot of bullish flow coming into this stock. It just cracked through my signal line at $5. So when it broke $5, that was my buy signal. So I waited for that. I waited for that pullback. I saw it. I bought more. I've got a bunch of calls for April on BTBT, and that's what I'm looking for. The earnings period is March 3rd, I believe, or March 2nd. March 2nd. So after that earnings, or maybe even on the earnings, who knows? We might see some movement here. But BTBT is already bouncing off of its lows at $3.50. There's not a lot of room for it to fall down, so it's a nice risk to reward setup. BKKT has had some huge volume very recently, and this actually lines up with a big plateau on the OBV chart. And if you actually look at it, there's a plateau here that already formed. So we went well above the previous peak when BKKT was trading at its highest price ever, above $33. Now that the OBV is well above that range, basically if you look at that AMC chart where I showed you the OBV, where it did that whole like break through the resistance and then consolidate for a little while, that's what this is. It's a big breakout consolidation. I'm expecting BKKT to run again, and this time I think it's going to be massive. I don't know what the time frame is going to look like though, because BKKT, this is the first time that we've seen it make these huge moves. So we don't know if the move is going to be the same, if it's going to be less than, the same as, or greater than this peak that we had back here in November of 2021. We're just kind of speculating right now. But there is a lot of bullish volume in this stock. Unusual Whales was printing a few alerts that the other analysts can talk to you about, and yeah, that's about it. Fun is a very similar crypto play, um, and it just broke through this support, and it's in the consolidation phase right now as well. So we're paying attention to that. You notice this OBV plateau once again. Got a plateau and it's rising. The OBV is rising while the price is falling. This is an even clearer sign. We got a name for this here at Hell's Trading Floor. We call this hellish divergence. So let's keep an eye on this. And fun, I'm betting we're going to see bounce off of this support line. I've got calls out to March 18th on this one, so that's where I'm placing my bets. Y'all do what's right for you. Understand your risks and don't take any bigger positions than you are willing to lose. This is not financial advice, and we are not financial advisors. Nothing that we say on this channel can be taken as any kind of investment recommendations. Any decision that you make here while you're on, whether you're watching on YouTube, the Discord, if you're in the community, you must be responsible for your own decisions. So please, please, please take everything that we have discussed here with a grain of salt and understand and respect your risk tolerance. I think that's going to do it for us today. Thank you guys so much for tuning into the stream, and I will see you guys next time.